Welcome back to Silicon Valley's December 2025 market update. Today, I'm breaking down both San Mateo County and Santa Clara County. And folks, this is going to be an important one. We're going to be seeing the typical holiday slowdown, but we're also going to be seeing some really interesting patterns as we head into 2026. Plus, I'll share with you a $85 million sale in Woodside that tells us a lot about the ultra luxury market. Now, if you want the complete 100-page market report for either San Mateo County or Santa Clara County with detailed neighborhood breakdowns and historical analysis, just comment below and I'll send it to you direct. All right, let's start. So, the big picture. The real estate market began its usual winter holiday slowdown in November. This is completely normal, folks. We're going to be seeing a substantial decline in both listings and sales activity, and this contraction typically accelerates through December, which is normally the year's slowest month before the market wakes up in mid-January. Now, here's what's interesting. Although the inventory of new listings shrinks during this time, December actually presents the period where motivated buyers can negotiate most aggressively, particularly on properties with extended days on market. Remember, well-priced, well-prepared, and effectively marketed new listings can still sell quickly during this time, often above asking price. But here's where 2025 gets interesting. Our focus now shifts towards the New Year's market. Historically, the beginning of the year has brought substantially higher demand that builds into the spring. This happens in early 2025 until it was affected by the tariff shock and subsequently economic reactions, which also inflated a significant slowdown in April. So what does this mean for 2026? That's the million-dollar question, or maybe I should say the $1.7 million question, which is our medium 3-bedroom house price. Let's talk about what's happening in the broader financial landscape because this matters for real estate. In the first week of December, we saw the S&P 500 and Nasdaq largely recover from their substantial November declines. The 30-year mortgage rate was close to a 14-month low. Consumer confidence showed a modest rise from November, but it remains very low by long-term standards. All eyes are now on the Federal Reserve's upcoming decision regarding an end-of-the-year benchmark rate reduction and the subsequent inflation report due later this month. These factors will significantly influence whether we see the traditional January demand surge in 2026. Let's break down San Mateo County. Take a look at this pie chart. This shows you the entire market composition over the past 12 months. You can see this market is absolutely dominated by 3 and 4-bedroom house. They make up the bulk of the transactions. That's the peninsula for you families who want space. And here are your price points. The key numbers to know: a typical 3-bedroom house runs roughly about $1.72 million, a 4-bedroom $2.58 million, and if you want a 5+ bedroom estate, you're looking at $3.75 million. For condos, you're in the $525,000 range to $1 million, depending on the number of bedrooms. More accessible entry points for first-time buyers. Now check out this chart. This is critical. San Mateo County's 3-month rolling medium house sales in November 2025 rose 1.5% year over year. That's modest growth, but it's still growth. And you can see the journey: the Great Recession crash in 2007 and 2008, the high-tech boom recovery after that, the pandemic boom spike, and now we're maintaining near record levels. And speaking of records, let's talk about San Mateo County's biggest sale of the year, the top sale. An incredible $85 million estate in Woodside, a 34-bedroom, 2,900 square feet of living space on 74 acres of land. It was built in 1911. That's a $3,500 per square foot. Wow! Other notable sales also includes $56 million in Portola Valley and multiple $25 million properties in Atherton. Now this shows the ultra luxury market is strong. All right, let's shift to Santa Clara County. Check this breakdown. Similar patterns to San Mateo, but you notice the overall volume is much higher. We're seeing over 3,000 sales in each, both the 3 bedrooms and the 4 bedrooms house categories. Now, Santa Clara is just that much bigger geographically. But here is where it gets really interesting. Look at these prices side by side. Santa Clara runs about 10 to 20% lower than San Mateo for most property types. A 4-bedroom house is 2.1 mil versus a 2.5 in San Mateo County. But, and this is the fascinating part, the 3-bedroom house are identical at 1.72 in both counties. Now, this tells me that the 3-bedroom houses are at the absolute sweet spot where demand equalizes prices across the entire Silicon Valley market. All right, what should you take away from all this data? Number one, seasonal opportunity is ahead. We're entering the slowest time of the year, which means less competition for serious buys. Now, if you're a motivated buyer with financing ready, December through January can be your best negotiating window, especially for properties that have been sitting on the market for a while. Number two, watch the New Year's surge. Historically, January brings a demand spike, but will we see that in 2026? That depends on the Federal Reserve interest rates decision happening this month. Inflation data, overall economic confidence, tech sector stability. Number three, pricing stability is strong. Despite April's slowdown, year over year, we're seeing positive appreciation. The market has digested the tariff shock and found a new equilibrium. Prices are holding at or near record levels. Number four, inventory remains tight. Even with the holiday slowdown, we don't have massive inventory build-ups. Well-priced homes are still selling. This suggests underlying demand remains solid. Number five, the ultra-luxury market is thriving. The $85 million Woodside sale isn't an anomaly. We're seeing multiple $20+ million transactions. High net worth individuals are still actively buying in Silicon Valley. So what does this mean for your situation? If you're a buyer, the next 4 to 6 weeks offer the best negotiating leverage you see all year. Get pre-approved now so you'll be ready to move on any properties that you might like within the next 30+ days. And if any property were to stay on the market slightly a tad longer, like 3 to 4 weeks, take a look at those because you probably can negotiate a good deal. And don't wait for rates to drop further because we're already at a near 14-month lows. And if you're a seller and if you can wait, list it in late January where demand surges. If you need to sell now, pricing is critical. Work with an agent who knows current market values, professional staging, photography, all these matters even in a slower season, and be prepared to negotiate. December buyers are serious and often very well qualified. If you're considering making a move in 2026, watch for my January report where I'll analyze 2025 full year's trends in the longer term context. Now keep an eye on the Fed's December decision and monitor mortgage rates. They're at 14-month lows, but could also, shift quickly. And as always, if you want a more personalized analysis of your specific situation, hit me up. I'm in the description below. And hey, if you found this market data helpful, smash that subscribe button, please, and hit the notification button. I post these market updates monthly. Plus, I share tips on real estate investing, AI too, and I also interview a whole bunch of very, very, very experienced and qualified and experts within the real estate. So watch out for those podcasts as well. And remember, if you want a complete 100-page market report on either county, San Mateo County or Santa Clara County, just comment below and I'll send it to you. Also drop a comment. Are you planning to buy or sell in 2026? And what do you think next year's market is going to be like? Until next time, I'll see you.